Hi everyone, welcome to today's video. So on this video, I'm going to do 10 stock market predictions for the year 2026. Natural question, why is it that you should listen to me? So three reasons. One is that it is fun. Okay, so it's always good to study these type of videos from a fun perspective. Second is that I'm not just going to make predictions. I have real money riding on these bets. So I have some skin in the game. It's not as if that I'm just talking and going away, right? I'm really putting money behind these bets. Third key thing is that I will explain everything with logic data. That is more important rather than the absolute predictions that I'm making. Because if you understand the logic data behind whatever I'm speaking, then accordingly you can curate that data and build your own predictions. That's what I would want you to get out of this conversation. So let's begin. And just fun fact, so last year also I did a similar video. In that video, I categorically made a point that I will build more positions in the US and will be underweight India. And that prediction has helped me amplify my wealth like anything. I'm up almost 40-45% on my US stock market portfolio. I was underweight India. Now I have started building more positions in India. So that's just a fun tidbit that my last year prediction did well. And hopefully this time around, again, some of my predictions would do well. So let's begin. And first and foremost, let's look at banner chart. Now this is a 100-year-old prediction chart. And basically what this A part outlines is, and basically just the backdrop of this chart is that this is a 100-year-old chart. It has done stock market prediction. So let's look at what this chart is saying. So for example, in 1920s or early 30s, there was a depression, right? So this was bursting of a bubble. In 1945, around, we had like a world war. So again, bursting of a bubble. In 1981, we had inflation crisis in the US. Again, bursting of a bubble. 1999, dot-com crisis, bursting of a bubble. 2020, right? So that was the COVID, right? Again, bursting of a bubble. So this point A indicates when bubble bursts. This point B, what does it predict? Well, it predicts the years in which you should become a net seller. Okay, so net seller means that this is where the prices of assets are peaking. Okay, so for example, if we look at 2026, right? So here what this chart is saying is that if you have X amount of stocks, try to be a net seller, okay, because you are going to see peaks. Okay, so this is what banner chart is saying. Now, do I agree with this? I'll explain it in a minute. But just for context, for example, in 2007, if you would have exited the market, you would have saved yourself from 2008 crisis. So this again kind of works out. So using this, do I agree with banner chart on 2026 that this is a good time to sell equities? My bet is that yes. Okay, so you should be selling equities. 2026 is likely to be a peak year for US stocks and even Indian stocks. So let me explain it mathematically rather than giving you my opinion on it by showing you the actual chart of what has been happening. So here, what you would look at is, and this is QQQ, right? This is the US index. This was the COVID rally, right? This is trend line 1. This is trend line 2, right? So this is where valuation correction happened. So Indian stocks also corrected, US stocks also corrected. And this red line that I've drawn here, this is trend line 3. Okay, so now what you would notice is that if you go a year back, the market or the US market or US QQQ has given roughly 16-17% run up. The important point that I want you to take out of this chart is that see, the market has been following this red line and the market has been consolidating around it. It has been following this. Okay. Now, this has been happening since 2023, right? So since 2023, this trend has been intact. Now, if we just extend this trend, so I've taken this trend line and extended it till here, and this is end of 2026. If this plays out, then we are going to see roughly an 18-19% rally. Okay, so from where we currently are. Now, this looks realistic. This does not look out of bounds. From a macroeconomics point of view, it kind of makes sense that why this is going to happen. There are forces at play. So let me just quickly explain it, that why we are likely to see maybe like an 18% odd gain on NASDAQ. Now, this will not come in a straight line, right? This will come with volatility. Volatility means that, for example, this year, right, from here to here, market gave a 17% returns. Okay. Now, this did not come in a straight line. There was a trade war dip that happened here at this point. Okay. So this was a minus 20%, right? Suddenly. So this year also there will be volatility, but we are likely to kind of stay in the zone. That's my prediction. Now, why is this likely to happen? That's more important. So for this, let me just quickly get into macroeconomics around it. And there are 3-4 key factors at play. Number one is that the stated inflation is low, right? If you look at consumer inflation in the US and consumer inflation in India, at least on paper, it is low. right? So this is first good thing for equities because equities benefit if inflation is low, right? So this is one. Second key point is that interest rates are in control, right? So it's not as if that interest rates are low, but interest rates are stable. And when interest rates are stable, it can lead to stabilization in business operations, right? Because for example, if I am, let's say, Meta, and if I know that this is the rate at which I'm getting debt, then I can plan my finances accordingly. So what people look for is that or businesses look for is either very low interest rates like 2020, 2008, sudden lowering of interest rates because you are getting interest rates for free. So why not borrow more? Otherwise, they look for stability on interest rates, right? So this is what they love, right? So this is good for equities again. So this is two. Third key point is that there are midterm elections in the US in mid of 2026. Trump wants to push up his ratings. And stock market is one animal that he likes to tame, and he tries to sort of do all that okay, it's because of him the stock market is going up. So yeah, so that might happen that he would want to push the stock markets up. How would he do it? That he would want to push this interest rates low, okay? And right now, he's in a tussle between the current Fed chair, Jerome Powell, who is the chair of US Fed, right? So he controls the interest rate and he has been pushing, Trump has been pushing Jerome Powell that cut interest rates, you're too late, this, that stuff. Jerome Powell is likely to be replaced in the second quarter of 2026. He'll be replaced by some other person who might be a Trump supporter. So he might help Trump run that agenda. So given all these macro dynamics also, it looks like that this target of plus 17-18% is likely. I'm not saying that this will guarantee happen, but this is likely to happen. Now, will this happen across the board? That's a separate conversation altogether. I don't think that stocks like Nvidia, right? So Nvidia, this is one of my picks, right? And this has done exceptionally well for me. I made like close to 60% plus profits on Nvidia this year, right? But I am now a little bit iffy about Nvidia, right? So I will be lowering my positions. So not at a stock level, but at a more macro level, the market is likely to do well. I do feel bullish on healthcare. I think healthcare is going to do exceptionally well this year. It has been a laggard industry last year, so I'm going to build more positions on healthcare. In case you guys are interested, I do run a global investment community where I talk about US stocks, I talk about global stocks. You can see me building out a live portfolio. I will start a new portfolio in 2026. In case you guys are keen to understand how to build out this portfolio, every month I do a conference call with all the investors who are out there and I help them understand the rationale of why did I add something, deleted something. I teach fairly advanced finance, right? So in case you are new, you will benefit from this regular commentary. We have a group. You will learn a lot of stuff. So in case you guys are keen, definitely do consider checking it out. So okay, so just to conclude, my first prediction is that the US market is likely to go up by 15% plus, somewhere around 17-18% range. It is likely to follow this channel, right? So this is prediction number one. Now, prediction number two has to do with the Indian stock market. Now, India's stock market has had a structural defect, right? Now, what is the meaning of structural defect? And I'll do a similar analysis for Nifty 50 also, the way I did it for QQQ. But let me take a side step and explain you structural defect. So what has happened in the last 3-4 years is that our LTCG has gone from 10% to 12.5%, okay? Our STCG on equities has gone from 15% to 20%, right? Our securities transaction tax has almost doubled, right? So there are 3 layers of taxation, right? Or rather like 3 types of taxations in the stock market. There is GST also, but let's leave that aside. But all types of taxation on the stock market have gone up. Now, this is not a healthy sign, right? Because many of this impacts FIIs, right? And FIIs have been away from the Indian market. This is part A. Part B is that DIIs have had no other option but to buy the Indian market. They have been balancing the Indian market for a while now. SIP inflow, which was really strong by the year 2024, it has started to come down. In fact, there is like a 70% or something like closure rate. You guys can correct me in the comment. I haven't checked this data, right? When I checked it a while ago, so I'm just speaking from memory, that the SIP closure rate has been really, really high, which means that the DII money will also dry up, right? If the market does not bounce, okay? So what I'm getting at is that, see, this has been a structural flaw in the Indian market. Now, if in the Feb budget, right? So in Feb, if our finance minister comes and they rectify this, which I really hope that they would, then definitely it would skyrocket the market. But in case that doesn't happen, I would not say that our markets will crash, but I would say that we will again see a consolidation, right? So something like this will happen and again we'll go something like this. And here the number does not look very appealing, right? So again, if you do a similar exercise, for example, if you just look at where we are to December of 2026, so roughly yahan tak dekh lete hain, right? So this is a 15-16% gain in dollar terms, okay? Now this is the first structural problem in the Indian market. The second structural problem is the fall of INR, right? Now this year INR has depreciated by roughly 6 to 6.5%. Now, if you go and analyze the returns, right, from let's say January, right, for an FII who was investing in the Indian market, so this is roughly like 14% run up, right? Now, 14% run up, you have to subtract 6.5, right, for global parity perspective. Now, these returns are very low for an emerging economy because the reason why FIIs come into the Indian market is for diversification and getting an exposure to a growth market. And if our market is not growing fast enough, it becomes a problem, right? So I'm just giving you like honest data. Feel free to do whatever you like. So here, the prediction that I'm going to make is that, see, here is the baseline number, right? 16% run up is what we can expect from the Indian market going into 2026. How did I reach this number? Again, this trend is being followed. The only difference between QQQ and Indian market is that this is being followed with a lot of volatility. So this down, this up that you're seeing, this is very aggressive in the Indian market compared to the US market. This is happening. This is coming with a lot of volatility. And it really depends on two factors. One is the taxation factor and second is the INR stability issue, right? So if these two factors are kind of okay, and if FIS feel okay, then, we'll see bullishness in the market. Otherwise, we are already seeing the base case scenario. Base case, we should grow at 12-13%, which is already happening, I would say. Assessment is that, and this is my pick, that we will go somewhere around 15-16% for the next year in the Indian market. And if FIIs kind of return, then we can see a 20% plus growth because this year we have done badly. Now, this comes to prediction number 3, okay? Now, the prediction number 3 is, again, has to do with the Indian market, that Indian market, the Nifty 50, right, which is the large cap. So people who are new, who don't know what Nifty 50 is, this is the collection of top 50 stocks in India. Now, if you consider top 50 stocks in India and Nifty 50 as an index, this is somewhat fair value. But if you go to mid cap, then mid cap still is overvalued. Now, why is it I'm saying this is overvalued? Because if you take a look at this entire chart from August till here, right, how much return has mid cap 150 given? It has given 0% returns. Okay. So in this zone, let me mark it for you, right? This zone is a 0% return zone. So in 1.5 years, mid cap 150 has given 0% returns, right? If you adjust it for INR fall, these are negative returns, okay? But why am I still saying that this is overvalued? Well, it's very simple, right? So for example, if you look at it on a 3-year basis, so 3-year would be somewhere around, let's say this is, so we go to December 2022. So here is December 2022, right? November, December 2022. So in 3-year basis, it has given 83-84%, okay? Now the baseline returns, typically, if you look at mid-cap stocks, they give like 20% CAGR, 22% CAGR. So there is still significant room for sideways correction. You will say that, okay, you are just looking at 3-year. Okay, let's do 5-year. Okay, so let's go to, this is December 2025. So let's go to December 2020. Okay, now this is 211% or 212%, something like this in 5-year basis. Now this should roughly be 120-130%. Okay, on a 5-year basis. And now this is again stretched. So no matter if you look at 3-year, 5-year, this still looks stretched. Okay, so your call. If you want to gamble your money, I had already been out. I have not invested anything on like indexes right now. I have a few positions on like small cap, mid cap stocks. I want to build more. But right now there is value in 2026 more on large cap compared to small and mid caps. I'll not touch small and mid cap funds much. This is my prediction. Okay. So now comes my next prediction, which is that AI theme is going to do exceptionally well in 2026. In fact, 2026 might be the data center year. Now, this does not mean NVIDIA year. Okay. Now there are hyperscalers. For example, there are 4 prominent hyperscalers, Amazon, right, and Meta being 2. These 2 are undervalued stocks. According to me, these are deeply undervalued stocks. Now, why am I saying that these are deeply undervalued stocks? So for that, let me take you to Amazon's chart. So this chart is very important. This is called as EV to EBIT chart or EBITDA chart. Okay. Now, basically what this means is, this is called as enterprise value. Now, enterprise value means that this is the value of the company, right? In a company, for example, I run a company called as Wisdom Hatch, right? Now, I have equity. Now, company is valued in a certain way. I also have cash in bank. I might have taken some debt. So if I add all that, right, and adjust for cash, that gives me the total value of the company. This is called as the enterprise value. Now, this is a machine, right? EV, or this, consider it to be like a big factory, right? Which has been put with cash, equity, everything put together. And this is generating a yearly profit, EBITDA, right? So EBITDA means earnings in a way, right? So if you are not from a finance background, just consider EBITDA as a proxy for earnings, okay? Now here, what you would notice is that Amazon is at its lowest, almost the lowest EV to EBITDA ratio that it has seen in decades. Now, why is that happening? This is something that people don't understand. Now, what has happened is that at Amazon was an e-commerce business, its margins were very, very low, okay? It spent years and years building brand value and scaling its business, right? Earnings are fine. It's not as if that this is a cash flow negative company or the earnings are not there. It's just that in order to build this EV or enterprise value, right, it kept getting bigger and bigger in size, but because of the fact that its margins were very low, this EBIT or earnings were not compounding fast enough. Now what has happened is that this is likely to change. Why? Because in 2026, AWS has become really big. This is a profit churner for Amazon going forward, right? For example, using its Inferentia chips and other TPUs that Amazon is building, it is expected that its EBITDA will grow. AWS will become even more profitable, which is the cash generating machine for Amazon. It's not focusing that much on its e-commerce business. It's rather focusing more on its AI business, which an AWS forms a core part of that business now. This is going to be a game changer for Amazon. Okay. Now this is unreal, right? The valuation at which it is trading. People just simply keep looking at PE ratio. This is not applicable for a company like Amazon. EV by EBITDA is a much better ratio for analyzing hyperscalers. Now, if you look at Amazon, if you look at Meta, these companies are likely to compound very aggressively in the next few years. Now, this can also be seen on technical charts, right? So, for example, if you take a look at this technical channel for Amazon, you will at least see that this is a 16-17% quick compounder here, just if it follows this channel. But it is likely to break this channel, right? This is where, right? I mean, therefore, I introduce you to the story of EV by EBITDA. That's see if the EBITDA improvement comes, right? And this enterprise value even goes lower. It cannot go lower beyond a point, okay? Then you will see a technical breakout here, okay? And that is what we are waiting to sort of form, right? So I myself have put roughly 10% of my portfolio on Amazon, roughly 9-10% on Meta, right? So, and Meta, I'm already on profits now. Let me show you Meta also very quick, right? And then I'll make the larger point, right, regarding predictions. So for example, if you consider Meta, right? Again, something very similar, right? So for example, if you consider Meta here, right? And if you draw the channel, right? So this is what the channel looks like. This is in a breakdown zone, right? And interestingly, in the last month or so, it has gone up by 15%, right? When I started talking more about Meta, right? So this is doing exceptionally well. This is likely to do exceptionally well. A previous peak of roughly $850 has already been made. This should be reclaimed like within the next few months itself. That's my hypothesis. So let's wait and watch. Okay. So yeah, so that's about that. Now, how does it play into the AI ecosystem? Now, the way AI ecosystem is designed is that we have 4 hyperscalers like Amazon, Meta, and all this. Basically, if they go up, accordingly, they push the other ecosystem play as well, right? For example, NVIDIA, right? So NVIDIA has had a great year in 2025, right? And I was a beneficiary. I had also invested in a company called as Nebius, right? Now, NVIDIA has actually invested in a company called as Nebius. Now, this is also a listed company. So when NVIDIA goes up, Nebius also goes up, right? So now opposite might or might not happen, I don't know. But this is how ecosystem play works out. Now, if hyperscalers are going up, the associated ecosystem also pushes up. For example, Google, right now again is a hyperscaler. It has a part called as Waymo, right? Which is the autonomous driving cars. Now, if Google goes up in value, then what do you think will happen to the autonomous driving economy? Well, it gets more impetus because Google has more money to spend. Its overall market cap has gone up because of stock price valuation. It will go out, sort out regulations, whatnot, etc., etc. It pushes the entire ecosystem up. Okay. So now this year, what is happening is that hyperscalers, because some of the hyperscalers are undervalued, especially Amazon and Meta, they are going to keep the AI theme alive, right? Now, accordingly, if you pick the right small caps, now again, this is something that I teach on my global investing community. We have picked a company called as Rocket Lab. It has given exceptional returns. In the last 5 days, it has given 50% run up. Now, amazing returns. Now, I do pick these type of companies. I do see value in terms of picking mid cap and small caps more in the US market. So long story short, Hyperscaler game is very much alive. As per Michael Burry, some companies will go bankrupt and he's betting on the collapse of entire theme. I don't believe that. I don't think that hyperscaler as a theme is going away. Some of them are undervalued. Some of them are at a very good buying level. If you buy and hold, there's a good chance that you will see a breakout in 2026. Okay, so the next big prediction that I have for you is that 2026 is going to be the year of healthcare stocks. Now in 2025, the Trump administration has been crushing the healthcare stocks. One of the prime reasons is that they were going against Obamacare, right, which is the subsidized healthcare in the US. So as a result, the capital expenditure that was being done on subsidizing healthcare companies, that kind of went low from the government side, and it created a series of bad events. Right? For example, if you consider something like Novo Nordisk, right? So here, take a look. The performance had been absolutely horrid, right? The stock corrected from its peak by roughly 68-69%. Now it has started to go up. In fact, today it is up by 8%. Okay. This is one of my stock portfolios. It has taken a bit of a beating, around 20-25%, but now it has started to go up, right? So just today itself, it is up by 8.09%. Pre-markets, so hopefully in the markets again, it will do fairly well. Now, why this will happen? Because if you consider like pharma companies, they have a long lead cycle and they require experimental money for drugs to find adoption. Now, oral weight loss drugs have come into effect. This is the reason why Novo Nordisk stock has gone up today. A lot of innovation is happening, that's one. Second is that the bad sentiments are already factored in. If you look at Indian stocks, for example, here is Max, and you will see that this has corrected by roughly 18-19% from its peak. This is a valuation correction that has happened on even Indian healthcare stocks, right? If let's take a look at Dr. Lal, right? So again, this is a valuation correction that is happening, right? So let me just show you, right, from its peak. This made double top, right? And since then it has corrected by roughly 20-22%. On a sideways scale, right, you will see here, right, that the stock has been consolidating from roughly 4 years perspective. Now, last 3-4 years have been very interesting for healthcare stocks. Consider Dr. Lal PathLab, right? It went from roughly 800 all the way till 2200, right? So almost 3x. Stock went up. Since then, it has consolidated in this sideways zone and it is preparing for a breakout, right? How has been the results per se? So let us quickly study results also. So if you consider results, right? So in 2021, the company used to do sales of 1500 with a profit of 300. Now their profits have almost doubled, right? Their overall revenues have also doubled. So it's not as if that these companies have been bad, right? I mean, right from Novo Nordisk, Eli Lilly, to UNH, to Dr. Lal PathLab, Max Hospital, all these are good stocks, right? Fundamentally, there is nothing off here. It's just that valuation-wise, they had gone crazy, right? Except barring some American companies. Now, 2026 would be a trigger year, right, where these companies might do well. Okay, so my next prediction is that this would be a year where earnings improvement or earnings expansion is going to come in focus over valuation multiple expansion. Okay, now what is the meaning of multiple expansion of valuations? It simply means that, for example, a lot of startups, right, consider Lenskart. Now, basically, they do not have like earnings expanding per se, okay, or posting better results. Basically, there is a lot of ops work that goes into creating like a balance sheet which looks very lucrative just before IPO. But honestly, it's not like consistent multiple expansion which is happening. Now, earnings should dictate the stock price, and this is where we are getting into 2026. Now, a lot of companies are likely to post decent results, right? And they might be undervalued. So, okay, so let me explain this. For example, if you consider the example of IT stocks, right? Now, these companies have okay earnings, right? But the valuation wise, these companies are good. So this becomes a net buy for me. On the flip side, if you consider something like Zomato. Now, Zomato technically has a great earnings, right? No problem in earnings, right? But the valuations is extremely rich. So for this might be a maybe for me. In fact, it would be a no. I'm not putting money on something like Zomato. I would rather wait. If company has poor earnings, then you should automatically reject it. If you follow this simple framework, this is going to be super useful in the year 2026. Now, this is a framework that you can apply to a series of companies. For example, again, let's go back to Amazon's story, okay? Now, Amazon has great earnings, right? So great earnings. There is no problem. Plus, the valuations are not stretched. So we can call it okay valuations. Now, this is a killer combination. Now, here we give it like, maybe a 5-star, right? So I'll just draw like 5 stars. Now, this is amazing. Now, these type of companies we are finding it really difficult to find in the Indian market. But as long as you can find it, nothing like it. In India, you will find this structure more, right? So if you can find this structure, this is going to do fairly well. Now, all that narrative building, right? I mean, like around IPO and multiple expansions, that honestly is not working out. 2026 is going to be a year where this thing will come into more prominence, that earnings is going to be the focal point for investors, and people are realizing more and more why they should put money behind companies which can grow their earnings consistently. Okay, so then comes the next prediction, and this has to do with the tax cut. So as I explained on one of my earlier points, that Indian government has been very iffy in terms of letting people make money from the stock market. The short-term taxation, the LTCG, the securities transaction tax, whatever you look at, it has been jacked up, and this has not gone down well, right? And honestly, if the growth rate of our economy was exceptionally good, if investors were still flocking in, it would have been a different story. But going forward, my prediction is that India is now, or Indian government has been pushed into a corner, right, where they do not have an option but to cut taxes. I don't know, when this would happen, but most likely, if I have to make a prediction, at least one of these three things, securities transaction tax, LTCG or STCG, need to come down, right? And it will come down, one of these taxes, probably in February, and that's when we can start seeing rocketing of the stock market. Okay, so then comes the next prediction, which has to do with Bitcoin. Okay, now interestingly, almost everything, right, from S&P 500 to Nasdaq to gold to silver to real estate, everything is hitting at an all-time high, except for Bitcoin. Okay, now Bitcoin has a very interesting story, right? Because if you consider Bitcoin on 5-year, 7-year, 3-year, 10-year valuation, it has beaten almost every other index out there, right? But this year has been exceptionally bad for Bitcoin. So if you consider Bitcoin, you will see that from its peak, it is corrected by roughly 30%. This year, returns on Bitcoin has been negative. This is not good at all. This is not what Bitcoin investors like. Now, 2026, I think it's going to be a very good year for cryptos. Why? Because a couple of reasons there. One is that the US government has already made a lot of transparent changes into how the crypto ecosystem is evolving, right? Right from its taxation, right from allowing players like Robinhood to trade in cryptos. Now, as a result of these institutional changes, a lot of companies have started putting Bitcoin on their balance sheet. Now, this is a video that I had done on Bitcoin. In case you guys want to know more about how the developments on Bitcoin are, you can consider checking this out. This gives a quick recap, okay? But long story short, Bitcoin has done poorly this year. Bitcoin is a speculative asset. This year, now when I say speculative asset, people just say, oh, it's really bad. No, speculation is not bad, right? I mean, if you think about it, people go to casinos in Goa, people go to casinos in Macau. Why? To speculate. People bet on horse racing. People do IPL, Dream 11, all that stuff. People buy lottery. Why? Because speculation. Speculation is amazing for people. People in the Indian stock market were doing FNO. Why? Speculative. So speculation is not bad. And Bitcoin is the big daddy of speculative things, right? Now, this year, Bitcoin has been bad because there were other better assets to speculate on. That's the honest assessment on Bitcoin. Think about this, that this year, for example, I picked up a company called as Iron. It went up dramatically, right? It went parabolic. I picked up a company called as Nebis. It went up parabolic. I picked up a company like RKLB, Rocket Lab. It went parabolic. Long story short, there were enough small and mid-cap options in the US market that was speculative enough. So this entire AI bet, at least on the fringes, right? I mean, if you take the hyperscalers out, they were amazing speculative bets, right? So people did not feel the need to speculate on Bitcoin. But going forward, as the returns stabilize on AI maybe, right? People would return to Bitcoin, or people would start considering Bitcoin more. So yeah, so there is a good reason why 2026 might be a good year for Bitcoin. Now, I don't know how much it would go, but if I have to give an assessment, it should at least hit 125K, which was the previous high. Now, again, if you consider this trend, you will see that Bitcoin right now is trading below this trend line, right? And this trend again has been in play since 2023. So good chance that Bitcoin will revive and we will see a sharp rally. Okay, so the next point has to do with commodities, right? And here we will discuss silver and gold, right? So these two have had parabolic runs this year. Exceptionally good returns and exceptionally good year for gold and silver bulls, right? And they have made a lot of money, right? So congrats to them. So here are the price predictions that have been done by different banks. So for example, Deutsche Bank puts gold at $4,500. Right now, gold is at $4,300. So $4,400 is a sideways movement. Bank of America gives it a target of another 10-12% up. Goldman Sachs again gives it a target of 10-12% up. And there have been some bears also, right? Some people are saying that, Bitcoin, gold can fall to maybe like 3,600. So let's see what's happening. Okay. So here is the backstory that you need to know, that in the last bull run for gold that has happened post 2020, gold has been an antithesis or a inversely proportional asset to US bonds. Now, this is a very important statement. Basically, what happens is that because people started or government started trusting the US bond less, they had to go to some other alpha asset and they went to gold. Therefore, and this can be seen from the fact that US government hasn't bought gold at all. Okay, so they haven't bought gold like in any sensible quantities over the last 3-4 years. They have been trying to fight the treasury, right? Now, what you need to understand is, and this is like a finance point, that countries like China or India, when they hold gold on their forex reserves, they are not making any cash flow on it. But on the flip side, if the Indian government is holding, let's say, a US treasury, right, or US bond, they are getting a cash flow on it. And cash flow is very, very important. So going forward, my assessment is that gold and silver prices are not going to rise too much. Okay. I've been saying it, I can be off, right? But people have a different viewpoint on it, and it's okay. I mean, that's how the market operates, that people are entitled to have different viewpoints. I'm helping you understand my thesis. Why? Because in the last 4-5 years, countries or central governments have taken a bold stand of diversifying into gold. Great for them. They have already built that hedge. Now, making gold a big part of their forex reserve, which just doesn't generate any cash flow, that's a slight problem, right? It's like you owning too much real estate, which is not generating any cash flow. You might be rich, but if you're just owning acres and acres of real estate without any cash flow, that becomes a slight issue. So that's the same problem that governments will run into. So owning cash flow assets is important for everyone, including governments. This is one of the prime reasons why I feel that gold and silver are going to correct. Now, here is a chart for silver, and this is a very interesting chart, right? And now here, if you take a look at parabolic rises, so this was a parabolic rise, parabolic fall, parabolic rise, fall, parabolic rise. You guys are smart enough to understand what happens next, okay? So I mean, if you look at it from a technicals point of view, if you understand it from a fundamentals point of view, there is no reason why gold or silver will continue to give massive rallies. It can go sideways or it can correct, right? So that's my viewpoint, okay? So just to summarize everything, great year for the US stock market, I would say. We can expect 17-18%. Indian stock market should also do fine. I don't see any major problems. Large cap should be good. Small and mid cap should go sideways to correct. That's my assessment. If you are looking at gold and silver, be a little bit careful. If you are investing in Bitcoin in sensible quantity, that's great. There is hope that there will be tax cut. If that happens, that will be a structural change to the India's taxation system in a way, and that would add a lot of value. It would bring foreign investors in. We are waiting. We are very hopeful that that would happen. I hope that you enjoyed this video. It gave you clarity, it gave you logic, and accordingly design your portfolio. Let me know what you guys think.